Nigeria's foreign reserves have continued a downward slope, shed at $975.7 million year-to-date, causing the naira to face fresh volatility, hitching up to $600 to the naira to the US dollar at the peer-to-peer trading segment. Now, the gross figure, which has remained a consistent gradual depletion in the past 5 months, dropped to $39.54 billion on Tuesday after it failed to sustain a momentary recovery witnessed in October. According to reports, the reserve suffered a wobbling performance last year, tumbling below $34 billion at some point after closing the year with an estimated reserve gross value of $40.52 billion. Earlier in the year, Bismarck Rawani, the chief executive officer of Financial Derivative Company Limited, projected that the revenue reserve base would also nosedive to about $32 billion, as the monetary authority would require between $8 billion and $10 billion to defend the naira. And away from that report now, the value of capital importation into Nigeria fell by 30.78% from $9.68 billion in the year 2020 to $6.7 billion last year. That's according to the latest data from the National Bureau of Statistics. Now, the NBS, in its Nigerian capital importation report for the 4 quarters of the year 2020 and 2021, disclosed that total capital importation into the nation was pegged at $9.68 billion in 2020 and $6.7 billion in 2021. In the 4th quarter of last year, the total value capital importation into the country stood at $2.19 billion from the $1.73 million which was recorded in the preceding quarter, showing an increase of 26.35%, while foreign direct investment accounted for 6.23%, amounting to $107.81 million. The report also shows that most of the capital imported into the nation was from Mauritius, the United States of America, South Africa, as well as the United Kingdom, with Lagos State attracting most of the capital being imported into the country. And now, as a result of the current Russia-Ukraine crisis, the federal government has announced plans to deploy measures to reduce wheat importation into Nigeria. Minister of Science, Technology and Innovation, Dr. Ogbonnaya Onu, who made this known, says the government is anticipating a possible shortage of wheat supply in the country if the crisis lingers further, adding that Nigeria can make a substantial amount of savings through the reduction of this import. Mr. Onu also urges the federal government and the Institute for the Industrial Research, Oshodi, that's FIRO, to make locally developed technology available to bakers in the best of the nation's interest. In another development, the Federal Competition and Consumer Protection Commission is taking the consumer rights campaign to the grassroots. It hopes to achieve this by engaging consumer rights groups, which would also serve as a channel for this to happen. The new engagement focus is one of the agency's efforts towards ensuring that incidences of consumer dissatisfaction are reduced to the barest minimum in the country. Lara Folayo has the details.
A consumer protection engagement between the consumer protection authorities and consumer groups. It is a move that targets getting consumers at the grassroots more informed of their rights while purchasing or utilizing goods and services so they can take appropriate action where necessary.
This program is to enlighten the CPGs, the consumer protection groups, who are the NGOs. You are here, you have seen the documentary, you have seen what we have started.
Many consumers are exploited by those they patronize through digital platforms, and the belief is that the grassroots sensitization will educate the public on how they can seek help from appropriate authorities.
Things we hear happening against the consumer or consumer abuses in the market, and nobody tells us until a consumer complains. But I feel that if they are up and doing, they'll be able to see some of these things and be able to give some information to the Commission to take it up from there.
The Consumer Protection Commission says consumer complaints have increased since the FCCPC Act was amended. This shows the public is now more aware of their rights, and it hopes to expand the consumer knowledge gap through the Grassroots campaign.
Consumer protection and about competition, and that law is the Federal Competition and Consumer Protection Act 2018.
The consumer groups present say they are committed to making this happen so consumers can be better protected.
Collaborating with consumer groups, we help them to really achieve what they want to achieve, because most of us we choose. Some may choose in drugs are related, some we choose in different, so we can choose different places and achieve what we want.
We have lapses in terms of knowing our rights, so we intend doing that through campaigns, visits, through communication awareness, and we'll go around in each 30 states, especially Kogi and Niger State, where we currently have programs running.
The country's consumer protection authorities have several times met with different groups and producers of various goods and services as part of efforts to ensure that consumers get good value for money. Lara Folayo, TVC News, Abuja.
And now shifting focus to the international front, Asian shares skidded today, dragged down by declines in Chinese tech stocks, and also elsewhere trading was choppy amid hawkish US monetary policy and shifts in Chinese economic policy and the ongoing disruption in commodity markets amid the Russia-Ukraine crisis. MSCI's Products Index of Asia-Pacific shares outside Japan dropped 0.47%, but after earlier gains was nonetheless up 0.5% on the week. While Japan's Nikkei was also little changed, having closed the previous day at a 9-week high. European futures also pointed to a mixed open, with the Euro Stoxx 50 futures last up 0.24% and London's FTSE futures down 0.1%. For the S&P 500, the feature inched up 0.1%, and in Asia, the biggest tumbles were in Hong Kong, where tech stocks shed 2.5% as the US and Hong Kong dual-listed names took a hit from renewed fears that a row over audit records will force them to delist in the United States. More index and heavyweight Alibaba, for example, lost 5.9%, and Australian stocks edged higher with minus to the 4, but Chinese blue chips also fell 1.23% as the benefits of the last week's political intervention began to wane. Alphabet's Google, Amazon, Apple, Meta and Microsoft may have to change their core business practices in Europe as EU countries and EU lawmakers on Thursday clinched a deal on landmark rules to curb their powers. France, which currently holds the rotating EU presidency, said in a tweet that there was a provisional agreement after 8 hours of talks. EU industry chief Thierry Breton also said in a tweet that the deal would also ensure fair and open digital markets. The Digital Markets Act, that's the DMA, sets out rules for online gatekeepers, that is, companies that control data and platform access. Under the DMA, the tech giants will have to make their messaging services interoperable and provide business users access to their data. Business users would also be able to promote competing products and services on the platform and also reach deals with customers off the platform. The DMA will apply to companies with a market capitalization of 75 billion euros, 7.5 billion euros in the annual turnover, and at least 45 million monthly users. Companies face hefty fines up to 10% of their annual global turnover for breaching the rules, as much as 20% as well for repeat of such offences. Now, the International Monetary Fund today decides on Argentina's $45 billion program, with the country anticipating to clear the final hurdle to rework its debt with the Washington-based lender, according to local reports. The agreement would mark the 22nd IMF program for Argentina and comes after more than a year of negotiations. It would also replace a failed $57 billion program from 2018, for which it still owes over $40 billion. The executive board, scheduled for 1400 GMT, that's about 3 p.m. local time, West African time, has to also reach agreement by consensus rather than a vote. The meeting comes after Argentina's Congress signed off on March the 17th on the financing aspect of the agreement, not the policies expected to keep the economy on track and the debt sustainable. Political cracks inside Argentina's ruling center-left coalition have also widened over the deal, and there are fears that the economic strings attached will further strain people in the South American country fighting with inflation of over 50%. But targets might be hard to achieve. JP Morgan this week also revised its primary fiscal deficit forecast for this year to 2.8% of the GDP, above the program's target of 2.5%. The European Union and also the United States unveiled a deal today to supply Europe with more US liquefied natural gas, and that's according to some sources, as the European bloc seeks to also quickly curb its reliance on Russian fossil fuel. The invasion of Ukraine by Russia, Europe's top gas supplier, pushed already high energy prices to record highs and has also prompted the EU to pledge to cut Russian gas use by 2/3 this year by hiking imports from other countries and quickly expanding renewable energy. President Joe Biden, who attended the EU Leaders Summit in Brussels on Thursday, promises that the United States would deliver at least 15 billion cubic meters more LNG to Europe this year than planned before. That's according to some sources also familiar with the matter. One of the sources added that the deal would also include higher US LNG exports to the EU come 2023, but since the US LNG plants are already producing at full capacity, analysts say most of the additional gas going to Europe would have to come from exports that would also have gone to other parts of the world. Wrapping up business news now, oil prices on the international market inch lower today as supply concerns eased as countries in the European Union also remain split on imposing an oil embargo on Russia, while the United States and allies consider releasing more oil from their storage to cool markets. US West Texas Intermediate crude recorded a price dip of 2.04% to hit $110 per barrel. Brent crude now sells at $116.70 per barrel, recording a downward price margin of 1.92%. Bonner Light's performance is also in the red territory, with a decline of 1.46%, selling at $119.90 per barrel. And for the OPEC basket, crude oil dealers offer $116.90 per barrel, recording a price surge of 2.04%.